Hey traders, happy Monday. Hope you all had a good day. I definitely had a nice day today. I'm back to my normal size that I usually trade with and had a pretty good day. I made just over $2,000 in just under 90 minutes. And the main trade that I had going was NVAX, NVAX. And it's kind of an interesting thing that happened on this one, and this is the reason why I'm making the video. Well, first of all, I still don't have my good computer. I realized that I left my keyboard at my other house, and so I'm either gonna have to wait until I go back to get it, or just order a new wireless keyboard before I can use my good computer that does all the really fancy editing stuff and lets me do like my screen share and stuff. So probably won't be doing any screen capture videos for a little while until I get that, but I'll still be able to put up the screenshot of my ins and outs today, and then also my P&L, so you can see just what I'm talking about before I talk about this trade, and you can reference it for yourself on the minute chart if you feel like it. But so the majority of my profits today came from NVAX, and I opened this position on Friday after the earnings call Thursday, and then between Thursday and Friday, the price spiked up massively in the overnight and pre-market session, and then it basically fell throughout the day on Friday. And so on NVAX, I was pretty much losing money on that particular ticker all day on Friday, but I didn't stop out of the position because I looked at the bigger picture and I saw not just where price was immediately, like right there, but I saw the bigger picture of where I thought price would be in the future. And so this is always like a kind of a tightrope that you walk when you're trading. And it's why there's such an art to it. I always say that when you use the strategy that I've created, or your own strategy, or like whatever strategy you happen to use, when you have a strategy and you use that strategy, it's oftentimes very simple, but just because it's simple doesn't mean it's easy. And the trade on NVAX on Friday and then into today is a great example of this, because the simple thing would have just been to completely stop out for a loss on Friday when I realized, oh, it didn't, continue. I thought that we would maybe get a slight pullback and then a continuation to the upside, and that didn't happen. But instead of just stopping out, I looked at the bigger picture and I thought to myself, we were below the 200, now we're above the 200, and I think that this is just going to be a slight little hiccup and kind of a reset, and then next week we're actually going to take off and continue to the upside. Because when I opened up this position on Friday, I did not get the same day expiration, because remember, I almost never use same day expiration. Very, very rare that I will ever do that, because you need to have at least 1 or 2 days so that you don't get melted out really hard with that theta decay. So when I realized I wanted to open up this position on Friday, I didn't get last Friday's expiry. I got this week's Friday expiry. So I still have 4 days left as of right now. So because of that, when it didn't, go my way on Friday, I didn't need to stop out for a loss. Now, if I had picked up the same day expiration on that trade, I would have absolutely lost money because it didn't come back in my favor on Friday. And so I would have had no time left. I would have been out of time and I would have had to close for a loss. But because I got this week's Friday expiry, I still have time. And today, you see what happened. It just ran pretty much all day. Up until the very end of the day, it kind of stuttered a little bit and kind of, it didn't fall out, but we had this really, really strong bullish momentum early in the day, and then that bullish momentum just kind of waned a little bit towards the end of the day. But I still made nearly $2,000 just on that trade alone. And so the point is, ideally, like if the strategy goes off perfectly without a hitch, what will happen is you will identify the trend, you'll get in on a slight pullback. So if you identify an upwards trend, you'll wait for just a little bit of a pullback, you'll get in and then ride the trend up. Likewise, if you're going the other direction, if you are looking at a bearish trend and you see price falling, you'll watch price fall, you'll look for a little bit of a retracement back up to get in before you go and ride it to the downside again. But that's what happens when it works perfectly. So for me, on this NVAX trade, it didn't work perfectly on Friday. That's not it. What I wanted to happen did not happen. And that's also a recurring theme that you'll find me saying on a lot of these videos, is that a lot of times the trade will work, it just won't work in the time frame that you ideally want it to work. So in a perfect world, we're in and out the same day all the time. But sometimes it's not a perfect world, and therefore sometimes you have to wait a little bit. And I just waited one extra day, or a couple of days over the weekend, but one extra trading day. So instead of getting out for a loss on Friday, I waited that one extra day, and I made nearly $2,000 on that same ticker that would have lost me a few $100s if I would have closed it out on Friday. And the next thing that I wanted to talk about is today, I'm sure you've heard that GameStop suddenly had another giant pop again because of Roaring Kitty, the guy that was basically like started the whole GameStop rally, came back and made another tweet or whatever. And so you might be thinking, should I trade GameStop, or like, what's the deal with meme stocks in general? And my personal feeling on meme stocks is that I like to stay away from anything that's considered a meme stock. Now, I'm certainly not saying that you can't make money on it. I mean, obviously, people got rich on GameStop the first time around, so you can absolutely make money trading meme stocks, to the upside or to the downside, either way. I just personally don't really like to get involved with anything that's a meme stock, simply because it's just, man, the volatility, like, I like volatility, but I like volatility that's slightly more predictable based on what you can see on a chart. So when you kind of study these particular tickers day after day, and you kind of learn what they're all about, and the motion, and you kind of get a little bit of a feel for them, almost as if it's like they were a person and you get to know them. You'll see a certain thing happen, and you've got a little bit better idea of what it might do. Whereas something that's just a meme stock, it's really chaotic, and it can just have these wild up and down swings that just come out of nowhere for who knows what reason. And that's why I personally don't like to get involved with them. But, you know, if you just absolutely love GameStop, then, you know, by all means, like, it's your money. Do what you want with your money. I like playing video games. I like GameStop. I've gone into GameStops, the physical locations, and bought video games, and it's cool. But just because I like GameStop as a place to go, that doesn't mean that I'm going to trade it. Now, a while ago, you might remember I shorted DJT, which is Trump's Truth Social. And you might think, well, that's kind of a meme stock. You know, you just said you don't trade meme stocks, but you traded that one. That's a little bit different because I took a look at the fundamentals and I said to myself, this is absolutely insane that this price is so high where there's basically no company there. I mean, the whole thing was based on one guy's name, and that was it. And, you know, politics aside, it doesn't matter whether you like Trump, dislike Trump, whatever. You look at the actual fundamentals of what you see for the company, and then you see where the price is at, and it made me say, this is not sustainable. Now, I don't know about what the fundamentals for GME are because I haven't looked into it because I'm not planning on trading it one way or another. All I would say is that if you are thinking about trading it, just make sure that you actually do your homework and look into the company a little bit and look into you know, where price action is going, and, you know, do your technical analysis the same that you would do on anything else that you might trade before you actually get into the trade. And if you still want to trade it, then by all means, go ahead and trade it. But hopefully I'll be able to get back to, you know, full Mac Daddy computer status here pretty soon once I get myself a replacement keyboard, and then I'll be able to do my actual screen capture videos where I break down like minute by minute, because I know that a lot of people like those types of videos because it really kind of shows you exactly what I was thinking as the minutes pass by. But until then, I still put up my ins and outs for the day on the minute chart. So if you'd like to go back to the moment in this video where I put up that screenshot, you can always go and look at your minute charts yourself and then compare them to my screenshot, and you can see kind of like, you know, where I got in and where I got out. As always, I'm looking to exit on big pushes up, and then I'm looking to enter in even more on slight dips if I think that I've got room to run on a continuation. And that's basically the way that I trade all the time. So that's it for now. I know this is a short video, but just wanted to check in and kind of say hi and say I hope you all had a good start to the week. And I'll be back soon with more videos. Take care.